Our next speakers are two of them are employees from the Association of Indiana Counties now. Pam Coleman, who I mentioned earlier, had been a county recorder and Steuben County auditor, and she worked for a financial group before we hired her. And she's been a great asset for us, again, taking care of our books. And she's such a resource for us as far as when a county auditor or county council person calls. It's great to have somebody who's been at the county level to help answer these questions. And then Jackie Clements. Again, Jackie was a county auditor in Tipton County and Clinton County. And she's on our staff as well. And Sue Ann Mitchell, who used to be a county auditor and a treasurer and an assessor and is now on the county council. She had a great suggestion when we were planning this today's event. Was a lot of county council people don't know what reports are available to them if they just know to ask for them. And so I'm going to have her come up as well as Pam and Jackie to do this next presentation. If Sue wants to come up, looks like, yeah, come on up. And so Pam and Jackie, if you all could come up, and I'll get the presentation set up here. So.
My name is Pam Coleman. I'm with the Association of Indiana Counties. I served as auditor in Steuben County and recorder in Steuben County. As I was auditor, I was famous for the hell no statement, which kind of got Steuben County out of some in the red. There are three things you need to know about me. One thing is I'm always late. The second thing is I always have a dessert plate hidden somewhere in the room. So if you're ever at a conference and you need a snack, find me. And the third thing is I have a proficiency for wanting visual aids that are color coded. So if I fly through some of this, it just means some of the examples you have, you can take home, read them yourselves. You don't need me to go through it. And then at the end of the presentation, I have my phone number and my email address for when you look at this and say, but what if I want to find this? Always call me. I always have time. I try and get back with you as soon as I can. But the most important thing is for you to walk out of here and have some idea of some of the financial information that you can work with your auditors and treasurers to find. Sue Ann will stop me, and I will look at Sue Ann because we've had some discussions, and because she's served in many capacities in county government, she has been a wonderful help trying to figure out some of the items that when you're an auditor or a treasurer, you assume that everybody knows that you have this information in your office, and you probably don't know. I also want you to know that each county probably does this a little bit differently. So if I show you what the treasurer's cash book looks like in Steuben County, it might not look like what it does in your county. In the examples, I gave a copy of a report from Steuben County, which is on the, what do they call it now? It's not Manatron anymore, Harris, on Harris Financials, and Kosciuszko is on Lao. So you can take a look and see how things look a little bit differently, but the information is the same no matter what system your county uses. So just bear in mind, if you don't really know that what you're looking at is what you think you're looking at, just ask. Auditors are always willing to help, sometimes not as quickly as you want it, but they're always willing to help. There's not just one way, and you've found that out coming to these meetings. There's not just one way to do something in Indiana. We all have our own little quirks. The treasurer's cash book. The treasurer's cash book is an accounting of all the monies that have passed through the treasurer's books. Now, I'm going to call it monies because in government we call funds for different things. There's a general fund, there's this fund, and money that comes in can be funds that have passed through the treasurer's office. I'm going to call it monies because if I say funds, I don't want you to think that this is earmarked for a specific fund. The cash book is an accounting of all the receipts and disbursements as well as the deposits in transit and uncleared disbursements. And I'm sure you're thinking, but don't all monies flow through the county auditor and county treasurer? And there are some monies that are taken in the sheriff's department, like inmate trust money, or possibly your commissary fund, that the auditor and treasurer never even see that money. They may see a report on that money, but that is not money that passes through their hands. One of the most important items that appear on the treasurer's report that do not appear on the funds ledger in the auditor's office is the tax that has been collected in the treasurer's office after the settlement of taxes. So if you go in and ask the treasurer how much money we have in the bank, she's going to tell you what the deposits total, but what you don't understand is that is not all county money. Some of that money is going to be tax dollars, excise, that will be going to the other units of government. So always know that it's the funds ledger that involves your money that is county money. The taxes that are held in the treasurer's cash books are receipted into the fund when there are requests for advanced draws, and the auditor doesn't see these funds until she gets the report from the treasurer at the end of the month. When we talk about advanced draws out of the tax or excise money on the treasurer's cash book, that means there is an outside unit, most times it's going to be a school, who would like to have a portion of the taxes that the treasurer has collected before settlement comes. And so they will send notice to the treasurer and the auditor that they would like an advance draw of taxes. And at that point, the treasurer will put that money, quietus it in, so that the auditor can disperse an advance fund. So always know that those taxes, even though they're in there, they're not yours. They actually belong to somebody else. I could read these to you. I'm going to run through this and I'll kind of flip through some of it. The first page on the treasurer's cash book involves the money that's been received for property tax, excise tax, sewer collections, the change fund. These are all of the sources of cash or monies that the treasurer has taken in. The auditor doesn't track these funds, and these numbers once again come to the auditor at the end of the month. On the second page of the treasurer's cash book is an accounting of all the monies in respect to bank accounts and investments. It contains the daily activity in their cash drawer. It also contains the cash, checks, credit cards received by the treasurer for that day, as well as the accounting of the disbursements from the auditor's office for that day. Yes, sir? Oh, you want me to send them there? Okay. I have examples about 6 pages in. Sue Ann said if you want to flip, there'll be examples of the treasurer's cash book, as well as we'll be coming up to the month-end report and the reconciliation between the auditor and the treasurer. And you will, I will go over kind of what the color coding is when I get to the end of the PowerPoint. So that treasurer's cash book is a snapshot of that day's monies that are held by the county for that particular day. Right, Suzanne? It is a day. Now, I have taken the last day of the month so that you can see what the treasurer's cash book looks at the last day of the month, compare it to the month-end report, and then compare that to the comparison of funds that the auditor has, so you can see from this report to this report to this report what you will see. I want you to know that cash, and when we talk about cash, cash isn't just cash. Cash is everything that the treasurer takes in, EFTs, transfers, credit cards. The county treasurer's month-ending report is a report that takes everything from the cash book on the last day of the month and combines it with the information that confirms the county's financials at the end of the month. The charges section at month-end treasury report contains information from the first page of the cash book on the last day of the month and compares it to the total balance of the ledger accounts on the fund ledger. And this is what gives you your monthly comparison report. The month-end treasurer report also considers your deposits in transit, and those are the deposits that have been made that have not hit the bank statement, and it also takes into effect the outstanding checks. This report reconciles the bank statements to confirm the current available cash that the county holds. But remember, these reports, your cash reports, have nothing to do with budgets. And that's the hardest thing to remember in government. You got a bunch of reports that have to do with where your budget stands. There's a whole nother set of reports that are the cash that it belongs to the county and the cash that the county is holding for everyone else. These reports will contain your tax and excise dollars and will be distributed to other units of government at the settlement of taxes. And settlement happens twice a year, in June and in December. The monthly comparison report, and in some systems it's called the fund ledger versus fund financial report. And this is a monthly comparison at the month end that a council and commissioners normally take a look at and approve and put note in the minutes that it has been reviewed. It's a reconciliation of what the auditor has done on their side of the financials, and it compares it what the treasurer has done on that side of the financial program. In some instances, they might not balance. And when that happens, the auditor and treasurer's office gets together, they take a look at the different items that they have. Normally what happens is the auditor's office forgets to walk over avoided transactions so that they let the treasurer know that we avoided something. At least in Steuben County, that would be what I did. This report is important as it shows the fund balance for each fund. And in this instance, we are talking fund. This lets you know what the financial status is by fund. Remember, this does not correlate to your budget. Hopefully, your budget is going to always be less than your fund ledger. Why is this information important? It's important to know what the current fund balances are so you can take a look at what your budget is versus your cash flow. Because you want to know that if you have a major expenditure in the first half for health insurance, general liability, workman's comp, that you actually have money in the fund to pay for this expenditure that's coming down the road. So it helps you sort of look at what the cash flow is for the county. It's important also to know the taxes, excise, wheel tax, surtax that has already been collected after settlement, so you can have an idea of, are you on track for your second half settlement distribution of taxes? Maybe there might be a large appeal out there that there's going to be a refund and you want to make sure that taxes are coming in possibly to cover that big refund. The first half tax collections and the second half estimated tax collections are really, really important to analyze your current budget status as well as future budgeting. So it's important to know that when you look at your treasurer's cash book, if you get a copy of it from the treasurer every month, you can take a look at those outstanding taxes that are in the county coffer waiting to be distributed at the end of settlement. So, are there any questions? Do you have any discussion? Sue Ann? Yeah, no, I've got a lot to go here. Yes?
Hey, you mentioned that it was the commissioners and the council to make sure they reconcile. I always just thought it was the commissioners.
Oh, well, it could be only State Board of Accounts that requires it to be in the commissioners. I guess.
State Board of Accounts required it just because we went through all this. My God, I know what it was.
Okay. I guess what I always thought is if I printed it for the commissioners, I thought
Good idea for the council.
yeah, that the council should take a look at it because you guys and ladies are responsible for making sure you know where you're at financially. So I would ask the auditor if they don't automatically give it to you. I just always thought if it ended up in one, it should end up in another. So State Board of Accounts says it only has to be presented to the commissioners. Okay. Oh, does the monthly comparison report, does it go to both the council and commissioners?
Yes.
It only goes to the Board of Finance. Okay. So it's same as the treasurer's month-end report only goes to Board of Finance? Only has to, it's only required. So you can ask for these reports. And I think it would be important that you do ask for these important reports so that you know where you are financially, because it's your responsibility as the fiscal officers to make sure that you know where you're at. Any other questions? Grants. Grants are always a great way to get money into the county, but there is a lot of liability on the other hand as well. It is important for each and every one of you to know how your county processes grants. Some just require the department head to come to the commissioners for approval. Some will require that they come to both the commissioners and council. Some of them are just allowed to request grants and come after the fact and ask for forgiveness. Make sure, yeah, I can see that that's happened someplace else. Make sure if you have a policy in place, it specifies the steps that are necessary before a department submits the application for a grant. I have included one handout of one particular grant application process. Later on, I have some others. So if you want to modify or start your own, just know if you actually have a policy in place. Some of the items that you need to consider before you go ahead and approve a grant are there salary and benefits involved for any new or additional persons? Does the job description fit the salary requested under any current salary guidelines? If you have had a salary study or you have salary guidelines, does this employee fit into any of those categories so that you know what they should be set at as compared to similar job descriptions within the county? Does the grant pay for salary, benefits, unemployment, workman's comp, insurance, both health, liability, vehicle? Does the position also include vacation, sick, personal times as a non-grant employee? And if the employee is a contracted employee, and everybody tries this, we'll just contract them. Make sure that they follow the federal wage and hour test as a contracted employee, because there are many counties who say they have a contracted grant employee and come to find out when the IRS comes in and does an audit, they are truly a county employee. Some of the other items to consider is there a match? That is the favorite word. We only have a 20% match. That's fine, but where are we going to get that 20%? Let them tell you what fund, or you help them find what fund you want to use in the match. Is the match an appropriate expenditure allowed out of that fund? Because if you say we're going to use edit money, or now lit money, is it an appropriate expenditure with your plan or what you can spend out of that income tax? Another important thing is it a reimbursable grant? So that means you're going to spend money first and then you're going to get reimbursed, or is it an upfront grant where they send you $2,500 and tell you to go out and buy laptops for the sheriff's department? So those are important things to know, because if it's reimbursable, then you're going to have to find out what fund that you're going to be paying for that grant out of, and then reimbursing it later. And then the auditor's office needs to know, hey, when this check comes back in for the grant, this is where you need to receipt it in. Who is going to administer the grant? There are a bunch of auditors out there that say, please, please, please do not approve another grant because I do not have time to administer it, or turn in all of the paperwork, or go to the Department of Justice's meeting out in Washington, D.C. during settlement time so I can learn how to administer this $300,000 grant. So make sure you know who's going to do the administration. Also, most grants now require the fiscal entity, which is normally the auditor, to submit all of the financials via the internet. So find out who is in charge of turning in all of the financials for that grant. Is there required training for the grant in administrating it and doing the financial? Some of these really large grants that flow through the county that are actually administered by a different department, not even a county department, actually involves required training somewhere else. Some of your big Department of Justice will make you go to Washington, D.C. for the administration conference, and then you have to go to Tennessee or someplace like that for a financial conference, learning how to actually do the financials for the grant. So make sure you know all of these things ahead of time so that the person actually has time to take the training. Is the training an allowable expense out of the grant? So you're sending somebody to DC to learn how to administer this grant, and it's going to be $3,000. Is that allowable out of that grant, or is that going to be part of our match money? Who's going to be responsible for submitting the non-financial part of the grant? Who's going to file that paperwork? And what happens if they don't hit the deadline? Or what happens if they leave the county? Who is going to take over? So not only are you going to say Eric Smith, who's the EDA person, is going to do it, but when Eric Smith leaves, whoever the interim person who takes his place, it's that job description who should be the person that's going to be held responsible for the grant. Who will close out the grant? That's the hardest thing in the world to get people to do. We've gotten our money, we've spent our money, we've reaped the benefits from the money, but that very final report has never been filed. If you don't file it, they may call you back and say, please send us the money back. So make sure there's somebody out there that's making sure your grants are closed out. The biggest question to ask, and this happened a few times with sheriff's employees, was that it? If we bring on a grant employee, are you required, is the county required to keep that employee on? So we brought in a resource officer. We're going to give you a grant for 2 years. When that grant expires in 2 years, you have to keep that employee on. So make sure that you know that if there's an employee brought on, do you or do you not have to keep that employee? Because some grants require it. If the employees are going to be retained, proposed costs and funds to support that additional employee, somebody needs to do that paperwork up front, because that employee may be a $45,000 employee now, but if you're self-insured and you've got a $60,000 stop loss every year, and that employee has health issues, that $40,000 employee could end up being a $100,000 employee the first year right out of the gate. So those are the things that you don't think about, because this is free money, and we really, really like to have money with a little bit of work involved. But it can really end up costing the county a lot in the long run. So check these out beforehand. Why is this information important? Part of it is the county annual report includes grant funds that flow through the county, and you have to have an accounting of that. So every year during the annual report, the auditor has to collect all of this information and do an accounting for all federal and state grants. Federal funds are checked closely, and all of your documents need to be in order. If the proper documentation is not achieved, the county may be responsible to pay back all of the funds they have received for a grant or even a pass-through grant. So one thing I would recommend is to check on those grants where it is not one of your department heads, but the money is funneling through the county. One of the biggest things you need to ask is, can they hire one of their own family members to work for them? There are many grants that prohibit the hiring of family members. If they find out you have a family member on your staff and you're paying for it out of the grant, you may have to pay that grant back. So those are different things that, even though that grant's going to pass through, those are questions you really need to ask ahead of time, because ultimately, when you sign the MOU for that grant and sign off on that grant, the county is responsible whether that's an employee of yours or not. If the employees are required to be retained, can you afford to take on those additional expenses? And the other thing to look at is, what's the county's liability and exposure for the added persons or grant money? Yes?
Slide before, you indicated that, maybe I misunderstood that, if the grant money ran out at the end of 2 years, you have to keep that employee on? I don't understand.
Oh, okay. COPS grant, that's it. There are some grants where the sheriff's department, what he wanted to know was, he didn't understand with when the monies ran out after 2 years, you had to keep that employee on. Several years back, there was a COPS grant, and if they helped pay for an additional department employee, when the grant ended, that employee was required to be retained. That's the terms of the grant agreement says it was a federal grant and you're required to keep that person on. Another one, but not all of them are like that. That's right. You have to look at them. Those are the questions you have to ask beforehand. You look like you're ready to ask another question.
I mean, as an employee at Will State, the council doesn't approve the money. I'm surprised. Hadn't heard that.
Yes?
I think, to answer the question, that grant required that the manpower level could not be reduced. If they added a deputy,
Right.
they had to maintain that many deputies on the department. You could not keep it for just 2 years.
And then let him go. And what he said is, in that particular grant, was you could not decrease the manpower on the sheriff's department or whatever department it would be. It had to be maintained at that level, so you couldn't have someone for 2 years and let them go. If they come in and you have 28 employees, the grant goes away, you still have to have 28 employees. It'll state that on the grant. It should state that on the grant.
Well, that little part of that came when you signed the agreement.
Yes, yes.
You agreed to it up front.
They are still?
We're doing up there. We're gonna do one.
Okay. Yes?
See on there, one of the things you should be very cautious about is what does a grant require your county to do? For instance, some of the grants require you to do things for your county and for many surrounding counties. So you have to look at, can you really afford to provide the services the grant requires you to provide?
And she is saying that sometimes you'll get a grant that you have to help provide services in surrounding counties. What kind of grant? Are you like talking community corrections or joint grants with?
One in particular I was thinking of is the grants that we receive to operate our youth services.
Okay, she's talking about in Monroe County, they have some grants where they have to operate youth services. And not only are they taking care of their Monroe County persons, they also are facilitating for surrounding counties. Okay. Sue Ann, do you have anything to add? Okay. And one other thing you'll learn about me, I am technically challenged. So if this thing stops in the middle of it, we'll just roll with the visual aids. That's why I'm a visual aid person, because I can shut down an entire Walmart with the blink of an eye. We've already had questions and discussions, but if you have any other, please raise your hands. Okay, on from grants. Oh, abatements. Yay. Abatements. Abatements are an integral part of economic development, but there are certain things you just kind of need to go in there thinking ahead of time. And I have put in, I stole, and I will say stole, but it was on the internet, so if it's on the internet, it's true. I stole Spencer County, one of their scoring sheets. I have given you an email address back in the more than you ever want to know about government. There is a really good one that St. Joseph County uses as well. It is many, many pages, and I thought I'd given you enough paper to cart home with you. But I did put that link, that website link, so that you can take a look at what St. Joseph County does. You may have one. You may want to come up with your own scoring sheet or way to discuss whether abatements are or are not beneficial. It is equally important for the council to consider the impact on the other taxpayers and units of government. Is it beneficial for all for this abatement to come in? And it's not just property tax. We all know it's the income tax that comes in, it's the realtors that sell houses, it's restaurants, it's shops. So it's a very hard thing to actually get firm numbers as to what these employees will help impact, and I know your local economic development corporation will be happy to help you with this, I'm sure. Items to consider before approving an abatement. First off, have the proper forms been submitted and in a timely fashion, and I wanted to put in big bold letters, in a timely fashion. It's always very interesting for me to figure out when somebody's coming to you to abate several $1 million off of their assessment that they just can't quite get the paperwork in time. It just always slays me that they're calling and saying, oh, we can't get our paperwork in. So depend on your assessor and auditor to make sure that you know that these things are getting filed in a timely fashion. Somebody comes in, they want to do it, you think it's great, but is there time to establish your ERA? Is there physically enough time to get this done in order for them to get their abatement when they want to have their abatement? You've got to know, is it real property or personal property? Because you may want to set up a different phase-out schedule for each of those types of abatements. How long do they want the abatement? What percentage of abatement would you like to give? And will the abatement be tied to a TIF in the future? And that is something that some people don't think about, but if it's an area that's likely to be TIFed, there are some TIF districts that take the rolled off AV in an abatement and use that as some of their funding. Oh, okay. She's yelling at me to be faster. Okay. Things to consider after approving abatement. Have the proper forms been submitted? Has the filer followed the estimations on SB1? If the filer has not, what are the actual tax dollars? This is something Sue Ann and I talked about. Actual tax dollars. Is it important if somebody has not met their obligation on the SB1 because they say they're going to have 250 employees and they only have 167, and you're going to say they are not compliant? But when you look at the tax dollars, that abatement AV may actually equal $75. So is it worth ill will to not approve an abatement when it's a $75 tax bill. Right, Sue Ann? Right. Yes, Larry.
When that happens, what we do is we find that they are in substantial compliance.
Very good. Larry says they're in substantial compliance. So basically, yes, they might not have met their goal on the SB1, but we're going to approve it anyways. I put in some abatement checklists. ERAs have an expiration. You can always reestablish, look at those types of items before you go on with your abatements. You can grant multiple abatements over different projects for the same company. Yes?
I'm a newly elected auditor, and we just went through our abatement process. Our town council approved an abatement, and because of the taxing expectations, it comes then to the county council. Does the county council have jurisdiction? Can they disapprove an abatement that a town council has already approved?
No. If it's in the town council's jurisdiction, that abatement is for them to approve. It is for them to say if they're in compliance. And it's also their decision, if the timing is not correct, if they want to waive a previous year's filing as being late. And that is an important thing to look at, is if you're waiving, what is that called, Sue Ann? Help me with that waiver. You waive they were late, you're going to waive and give them. You waive the filing requirements. That can impact what you have budgeted for and what their taxes that they're going to take in the units may take their taxes, so it may cause a shortfall. I have a whole list of different, more than you ever want to know, and then some. And then some. I have also given out pictures of what your important resource books look like, so that if you don't know what that is on your shelf, you can see it. If you wish you would have asked something and didn't, and want to ask me, please, like I've said, feel free. I've also included some of the acronyms of everything you hear in government, as well as a list of very important numbers that Sue Ann and I discussed. If you think of others, email it to me. The last one I could think of before printing was, you need to know what your snow emergency plan is. Keep that at the house because everybody's going to call you. And with that being said, I'm going to hand this over to Jackie.